Okay, Nico, I just wanted to show you the heat map on the tester. It is a 31x the speed of normal market speed, okay? And just to show you, how the heat map behaves. This one is on the Euro Australian dollar on a 30-minute chart. And the thing I wanted you to, well, you can pay attention on everything, okay? It's there for you to watch it, but um, when you make this on a very dark background, one of the things that you will see and notice, obviously, the volume changes, the different shades. That again, uh, we have 510 different shades of green and another 510 different shades of red, and that's not only for the actual volume values, but also for the tags and the labels. So especially this, the labels on the 5 different dimensions, that more or less come from this data here from the heat map. You can see how these colors light up and light down. They disappear. Like for example here, lambda, the buy lambda is gone. You don't see it. Why? Because it has a low value, actually going into negative. So it is red, but we don't see it because it's a low value. As soon as it increases in red value there, you can start seeing it. Okay, so it is funny how here is mostly green. So there you go, institutional getting orders filled here for a moment. Um, when you see this all green light up, very bright, that catches your attention, it means strong bull bias on the market. And as you start to see this to diminish in light, in luminosity, then you will see like now you see they're losing strength, so it start to lie down to disappear and reddish start to show up, you see. So it's very intuitive and very straightforward. Just by a glance you can check and see and have an idea on what's the situation on the market. Okay, you see here mainly buying, retail buying, okay, 78, 73, 80, that's buy pressure. And as we reach higher prices and some institutions get filled, you will see here on the S side showing up in volume. Like right now, you see, institutions are getting filled. They're selling everything that the market um, pressure is buying, mainly, mostly retail buying. Uh, there you go. Then institution take the counterpart of that. So you can see here the interaction of 95% and the 5%, 95% and the 5%. Being the retail and the institution interacting with the flow of money. So that's really awesome. How you at a glance you can now see there is a low volume, happening mostly on the short side. After institution took position here, you can clearly see here. Then the market realizes, and they also want to take short position after the fact. But you can see here institutional volume here, and then retailing activity right after that. So it is an awesome way to see how money is moved around by the retailing community and by the institution and smart traders community. So I wanted you to, just to see that, especially on how I designed the labels matching the different color shades of the heat map. So when something important is happening on either side, it will light up and will be very obvious to see it because it will catch your attention. And something like now, you can hardly see the label. It means, well, nothing really major is happening. It is quiet, although you can see it here what's going on. You see all the values, the data is there, But in terms of catching your attention of what the market is generally doing, these labels are really awesome, because they show up and disappear based on how much volume, either on buy or sell, on each of the 5 different dimensions. Actually tells you, what's the story, what's going on. And that's really awesome to see it that way. Okay, now you can easily see, retailing buying going on, and most of the dimension is on the long bias, right? And you see that came after some institution bought down here, which is in this candle right here, when you reach liquidity down here, you see. From that point on, all of that was bought by institution. You see it right here. Also, it is good to notice that institutions are really taking advantage of these higher prices in the content of all of what we're watching. So all of this is high institution and smart traders selling volume in this area. You can see it here. Then it starts to diminish, but all of that was, institutional and smart investor moving their money down for the most part. But some of them probably got out here. That small buying activity down here, that is mainly institution and smart trader buying. I wouldn't doubt that would be getting out of those positions from here. Some in here and some in there, right? So yeah, it's pretty interesting to see that. And on the other hand, I wanted to check on the hedging trade. This is how have evolved. More error collected. CAD yen goes a lot more stronger than oil. You can see it in the 15 minutes. Appreciate even more. Now oil is moving up, so probably it's taking some of my profit. I had about $25 profit. Now it's 1992. Well, it leveled down, level up. Now I'm about break even, or $1 minus, between minus $1 or $2 and plus $1 or $2, because now oil is catching up. You can see oil is moving up together with the CAD yen, but the CAD yen is a lot stronger. So you see my error collecting just went down in this past 15 minutes. You can see that was the maximum. It reaches one. This is on a 15-minute chart. Okay, you can see there, less error. That took off some of my profit that had on the table. Obviously I was expecting more. That's why I didn't take the trade. On the 30-minute chart, we still halfway through what I expect to be, 1 point of error. Right now we are at about 45. I think it's the value. Yeah, 45. So yeah, there you go. That's still cooking. Still cooking. Not ready to take that off yet. And back on the heat map, there you can see it again. Mostly on the short side bias. Bearish bias. But it's a light red. It's not really pinkish. It's not that strong. Now it's bullish bias. You can easily see by watching the labels. And then you can also see, where people intend to sell if the market goes wrong, down here. Also, where we do have liquidity on the demand side, we did have some heavy liquidity here. They somehow took it off. Somehow after the market went up, they took it off, and then when the market came down, they added back again, but not on the same amount previously. And now closer to present time, less volume. So I'm not sure if they they project a lower market than that, and they don't want to commit on risk by buying here. Maybe they think the market is going to go even lower, you know. I mean, there's so many ways to interpret that information. Somehow they lost interest on heavy buying there. Also here, they lost interest. So maybe they projecting a lower market than that. Look at, as I got to search more on the history of what liquidity did. That was a heavy volume of buying. Obviously now AI is not registering because it looked at certain bars um, from the past. But anyways, I guess their interest right now is to buy here. This is Euro Australian on a tester. But anyway, you can actually see, how this liquidity progresses. They take it out, they pull it back on. This is AI relating the different market that affect the Euro Australian on a 30-minute chart. And we can actually see, when the general market plans to buy this currency. We don't know exactly why. I mean, if you really search on a fundamentals, I'm sure you're gonna find reason why, but we never know really all the reasons why the smart money, the institution, are planning to, put more volume at a certain level and take it off, and then search, to diversify and diversify their risk and take off some of the volume here and put it some other place, because in actual fact, this is what AI is doing. It's watching where the volume of supply and demand is going. They're taking off from here, it's going somewhere else. They're taking from somewhere else and putting it here. That's why doing the AI correlationship is really powerful. We can actually see supply and demand being moved around from one asset to another, depending on how the big institution the big institution and the smart money do move their money around to diversify their asset and to go around with their market prediction. So that's really interesting. You see now that they shifted back again, and now they're putting volume here. I don't know what happened, but they're now bidding on these lower prices here for the euro. Look, more volume. So they're moving some money out of some asset, on other correlated asset, and they're moving it down here. I mean, they want to strongly buy those lower prices on the Euro Australian. They want to get positioning long on the Euro Australian. So if prices get to that level, so that's significant. And AI is detecting that, and it's showing you very clearly what's going on supply and demand globally that is affecting this asset. Not as general, just changes that are affecting this particular asset. If you put it on S&P right now, on DAX, it will be a complete different story. It would be correlated, obviously, but it will have, a different speciality on how AI is assessing supply and demand for that particular asset at that particular time, at this particular time. Because if we see it, let's check it. The journal. Well, it's supposed to be moving, but this is tester, but this is how AI, there you go, you see it's moving. This is how AI is watching this particular currency. I mean, it's assessing supply and demand on all different correlated assets, and it's building tick by tick how that supply and how that demand is affecting on every price on every single asset that is out there correlated to this one. So you see, This is heavy. This is heavy CPU intensive artificial intelligence, acting on every single tick, assessing and building and rebuilding supply and demand on each price. And with the help of these labels, we can see the general condition of the market. Anyway, I just wanted to show you that, and hope you like it. Thank you for watching.